Welcome to TradeTheNBI.com. This is Jonas. Report is for the 14th, Bastille Day. And, I think people are probably expecting a bit more of a reaction from the CPI numbers that came out. But, this is where you have the two camps. One says that a recession is going to have to take place in order for the Fed to get things under control. Therefore, they'll increase rates in the short term. But by next year, they'll have to start going back to quantitative easing. And so there's the part of the market that thinks that that's a bullish activity. As we can see from the readings, not so much in the short term right here. We do have short-term buyers on the steel here on the DOC rising, but from an NBI standpoint, still in negative territory and fading, and we're below the 23. The other thing I always thought was holding this up is we also see the gold rising on our shakeout, which usually lends to supporting. But if that starts to fade off a little bit, we could see a bit more of a decline within this, particularly if white NBI gets a bit stronger than this. And so I think it becomes pretty simple from a at least broader standpoint. That 23% at 37.96 becomes sort of the buy above level from a daily standpoint and keeps things pretty strong. Of course, we'll look at the 50K and the intraday as well. But nothing's changed. I mean, we already know that there's some significant headwinds economically ahead, and how that plays out and whether there's going to be further energy impacts remains to be seen. Obviously, oil took a nice dip and it's below that 100 level, which was key. From a NASDAQ standpoint, you can see a little bit stronger, not quite the same degree of decline. And we had talked about the NASDAQ had been stronger on the turnaround at the beginning, and also led part of this dip, but holding above its 23%. So it's a little bit of a difference there, but pretty weak from a midterm, long-term buyer. So the DOC red and green with that cross below. So short-term buyers should be enough to at least keep things at a reasonable level. Euro finally did it. You see there we got close to parity, but then finally dipped actually below parity for all of the briefest of seconds. And if we look at the intraday, that's what it looked like. It literally came here and then boom. Clearly some interest in keeping it above the 100 level, and it faded that complete move. And so that's the only problem when you get involvement of let's just say central banks that can move that kind of thing. They only do it for short term, and then it fades back off and we're right back down at the same threshold. And it's still pretty hard to make the case that the euro should be over parity at this particular stage, given the crisis that's taking place in Europe, which is going to be interesting because we're going to start to see what impact that has on earnings for S&P 500 companies. It's a lot of it that they get profit-wise, and that came from the improved euro exchange. So that could have a material effect, and we'll start to see that. It'll be interesting. I think that it's going to pose more difficulties for justification when it comes to EPS and forward-looking constructs, because if the Fed is going to be forced to continue higher, at least at 3/4 point move higher, some are even talking about a 1. I think probably the 3/4 is more realistic, but it certainly makes it much more attractive to be in dollars than euros. From a gold standpoint, again, should be going the exact opposite direction, but of course we've talked about the paper trade versus what they're able to do, and I think that's kept it artificially low. So as we start to see turnaround moves, I think gold could be an attractive setup going forward there. From an oil standpoint, you can see the decline we've had pretty significant, leading back just to what we were talking about here from April and March. So I mean, while it's well off that peak that took place at the beginning of March, still elevated broadly. And treasuries, of course, a lot of interest in getting into them, but we haven't seen peak rates as far as that goes, but it'll be interesting to see that decline come back through as rates start to climb back up. I mean, there's an awful lot of debt that needs to get financed, and that is going to really continue to suck away capital from regular markets. Bitcoin trying to push its way back up towards that 20K. Again, the crypto space has really been under a lot of pressure given the change in easy money. It's amazing what happens when it costs to actually get cash as opposed to just being unlimited. ETH been much stronger, relatively speaking, and I've always liked the way it trades within those algos, so it's definitely an interesting one. We can see here from the 50K standpoint, nothing about that is strong or good because you've got magenta fading on that, white leading the whole way through. We've been in negative shakeout here, and certainly DOC red well below zero, even up at the peak. And once that DOC spread took place right at the top there, it's been nothing but straight down. You can see trading live in the pre-market there, continuing its deceleration. So that's when the CPI numbers came out, and of course, coming right off our previous 38.63 algo level, just a fraction above it, and then boom, right below it. And that pretty much was it until later in the day because we just kind of traded sideways. Then we started to catch a little bit of strength here. Once we got the green DOC above cyan here, you had real good strength of bull setup in that one, and then the dip of orange, and that led to the beginning of a pretty decent move. But of course, it started with positive extremes, going all the way back to the 84 level, and did we quite get there? I think it was a little bit above it at the beginning, made a secondary run, but certainly filled it back in a little bit later as we started to bounce back and forth. And I think there were some pretty clean ranges within that, and clearly we're all the way below that positive extreme at this particular stage. Would have been somewhere in the 84, which is right here, and that just took place a little while ago, and then we bounced off of it. So that's going to become the next level to go back and forth. To me, what's interesting on a couple of these on the turnaround and working on the adjustments for that for the paint bar is that green DOC being above really adds to the strength of those particular moves. And of course, usually you get that slight fill back into it, and then it makes the run, and we've seen it repeatedly. So incorporating that to make sure that we get that adjustment in there. But overall, pretty good action. And I think the ranges are going to start to continue to improve. Nothing to object to. You just sometimes have to wait for the action to build and just go with what the readings are from that standpoint. And that's typical summer trade. But still, I think it's more active than some people might have expected. And it could change at any time and get certainly more volatile if we see more activity from the war situation and any newer numbers coming out from changes in the economic growth situation are really going to be where I think everyone's focused. It's kind of one of those where you sort of hold until you know for certain. Once it's clear, we're going to get a probably strong directional move. Either way, would get some clarity as far as how things are going to play out. Still, there's a strong sense that a lot of people have been very negative on the market, and when you get that kind of one-sided build, you often get counter moves to it simply because it's the easiest way to take advantage of over-positioning from the herd. Because again, markets tend to go opposite the herd direction. Worth noting, as always, though, I keep posting details on our Skype chat and going over special circumstances. Trade well. We'll talk to you later.